What happens when the engine of a media company slows down? For GMA Network, the answer in the first quarter of 2026 was clear. Revenue dropped sharply, and profits followed. In the 3 months to March, GMA posted 3.36 billion pesos in revenue, a 28% fall compared to last year. The main driver? Advertising revenue, which sank 31% as the election-related placements that boosted 2025 figures faded from view. This downturn rippled through earnings. EBITDA fell by 62%, landing at 632 million pesos. Net income dropped further, down 87% to just 102 million pesos. Despite efforts to trim expenses, with operating costs cut by 9%, GMA could not offset the revenue loss. Margins suffered. Gross profit narrowed to 44%, EBITDA margin halved to 19%, and net income margin sank to 3%. For analysts and investors, GMA's results raise a central question. How much does its bottom line rely on advertising? In the quarter, nearly 90% of revenue came from ad sales across television, radio, online, and international operations. The weakness revealed the risks of this concentration. While flagship channel GMA7 retained its lead in ratings and industry awards, strong viewership alone could not shield the company from a revenue shortfall. GTV and other channels also faced tougher conditions, underscoring the challenge. The core television and radio segment turned from profit to loss, generating a 168 million pesos deficit compared to 850 million pesos profit last year. Even as personnel and talent expenses were reduced, these savings could not fully support GMA's legacy broadcast business against a weaker ad market. There were brighter spots in digital and non-ad revenue. Subscription, production services, and merchandise income grew 14%, with digital advertising showing year-on-year gains. Yet the increase was modest, a 45.5 million pesos uptick versus a 1.37 billion pesos drop in traditional advertising. Digital growth is promising but does not yet offset legacy revenue volatility. Cash flow held steady, with net cash from operations at 786 million pesos. GMA reduced borrowings and maintained manageable liquidity. However, the declaration of a 0.40 pesos per share dividend drew down equity and retained earnings, raising questions for income investors about future dividend sustainability if earnings remain subdued. The first quarter story for GMA is cautionary. Advertising dependency poses risks. Digital channels provide new opportunities. But overall, margins have become fragile. For investors, prudence is key. The company is profitable, but its earnings power rests on regaining momentum in a more stable advertising landscape.